Hello, everyone. Let's start our today's discussion. I hope you all remember that in the previous class, we were having our discussion on basic income tax calculation. In basic income tax calculation, we discussed the concept of a basic income tax return. We discussed how to deal with basic income tax return. There are three heads of income: non-saving, saving, and dividend. Then we had a discussion on real estate investment trust. These are mutual funds which invest in property market. Then we had a discussion on dividend income. And then we discussed issues relating to trust, which included discretionary trust and interest in possession trust. Today, we will be moving forward and we'll be discussing concept of interest income. Now, as you all know, that interest income is classified in the head of savings income. Okay, so let's look at the tax rates of interest income, that how it is taxed and how to deal with it. Our approach is simple, that we discuss the concept, we do the practice questions, and then we move towards the past papers. I want you all to concentrate on it so that you people can have clarity. Now, when we talk about interest income, the interest income is classified as saving income in the tax return. There are three heads of income in the tax return. The first one is non-saving, the second one is saving, and the third one is dividend. We have discussed the tax rates of non-saving and dividend already. Now we are moving towards saving income or interest income. So interest income is classified as saving income in the income tax return. Now, what are the tax rates for saving income? The tax rates for saving income are same as non-saving, with some differences. Now, what are those differences? Listen to me. Saving income has a 0% band. Saving income has a 0% band, similar to dividend income. If you people remember, in dividend income, there was a £2,000 0% band. In saving income also, there is a 0% band, but its limit is a bit different. If you are a basic rate taxpayer, then 0% band of saving income is of £1,000. If you are a higher rate taxpayer, then this 0% band for saving income will be of £500. And if you are an additional rate taxpayer, then there is no zero rate band. Listen to me. Interest income is classified as saving income in income tax return. The tax rate of saving income are same as non-saving. They are same as non-saving. 20, 20, 40, 40, and 45, 45. But the difference is that in saving income, there is a concept of 0% band. If you people remember, in dividend income, there was also a concept of 0% band. In saving income also, there is a concept of 0% band, and this is £1,000 for basic rate taxpayer. Who is a basic rate taxpayer who earns between 1 to 37,700? If you are a higher rate taxpayer, then this 0% band is of £500. And if you are an additional rate taxpayer, this 0% band is zero. There is no 0% band. So when we talk about interest income, it is classified as a separate head of income, and that head is called saving income. The tax rates of the saving income are same as non-saving income. The only difference is that saving income gets a 0% band. Okay. Now, what I have told you theoretically, point 1, 2, 3. Let's apply it in the practice question, and then we will move forward. Okay. You know that my approach is based on practice. We look at a concept, then we practice it multiple times through the practice question so that we can get clarity. Let's look at a practice question. Then we will revise the rules again before we'll move forward. Patience and concentration is very important. Okay, let's look at it. Mr. N has following incomes during the year. Employment income of 23,000. Income from discretionary trust of 7,000. You all know that on discretionary trust, the advance tax is 45%. Income from IIP is 7,500. IIP earns from interest income. Now, if IIP earns from non-saving or saving sources, we classify it as a non-saving income and withholding tax is 20%. If you remember, we have studied these rules here in IIP, that if the IIP, non-saving income for beneficiary, if the trust earns from non-saving or saving sources, the withholding tax will be 20%. Then we have income from bank interest, and then we have dividend income. Listen to me with patience and concentration. What I'm doing is I'm first making the heads of income. The first head of income is non-saving. The second one is saving income because we have studied this also. And the third head of income is dividend. Now, the employment income of 23,000 will go in head of non-saving. The employment income of 23,000 will go in head of non-saving. Then we have discretionary trust. On discretionary trust, there is 45% withholding tax. So we will gross it up by dividing it with 55 and multiplying it with 100. Okay, just a second. 7,000 divided by 55% multiplied by 100%. So we will gross it up 12727. And you all know that discretionary trust always goes in the non-saving income. Then we have interest in possession trust. The amount is 7,500. If the interest in possession trust earns from non-saving or saving sources, we classify it as non-saving income and the withholding tax is 20%. Now these all are the old rules. So this is 9375. Then we have bank interest. There is no withholding tax on bank interest. And bank interest will go in head of saving income. Its amount is 14,500. And the last one is dividend income, 13,500. Dividend will go in head of dividend, 13,500. Have some patience and listen to me carefully. Now we arrive at the value of total income. Let's repeat what we have studied. First of all, we have to classify all the incomes. Employment income 23,000, it is a non-saving income. Discretionary trust is a non-saving income, but there is 45% withhold, advanced tax on it. Income from IIP is 7,500. If IIP earns from non-saving or saving sources, we classify it as a non-saving income and there is 20% withholding. We have studied this rule 2 class backs. Then bank interest goes in saving income and dividend goes in head of dividend. So we will add all of the incomes to arrive at the value of total income. 23,000 plus 12727 plus 9375. So here the total income is 45,102. Here it is 14,500 and here it is 13,500. Now we will deduct personal allowance, which is 12570. Now we will deduct personal allowance of 12570, which will give us the value of taxable income. Now our taxable income will be 45,102 minus 12570. So it is 32532. This is 14,500 and this is 13,500. If I add up all of them, my total taxable income is 32532, 14,500 and 13,500. 60,532, which means that on total, I am a higher rate taxpayer. On total, I am a higher rate taxpayer. Now, have some patience and listen to me. Now we will apply tax on it. First of all, we will apply tax on non-saving income. 32532. Now this whole amount lies in the basic rate band because basic rate band is still 37,700. 32532 into 20%. So this gives me 6506. Then we have saving income, which is 14,500. Now, since we are a higher rate taxpayer, so first 500 will go in the 0% band. So this will give me 0. Now, let's look at the basic rate band. The basic rate band goes till 37,700. So how much amount is remaining in the basic rate band? How much amount is remaining in the basic rate band? Minus 37,700. So 4668 is remaining in the basic rate band. So saving income tax rates are same as non-saving. And the last one will be 14,500 minus 500 minus 4668. On 9332, we will apply higher rate of tax, which is 40%. So this is 3733. And the last is dividend. I will give a review again, so don't worry about it. The dividend is 13,500. Now for dividend, you know that always the rule is 2,000 goes at 0% band and the remaining dividend, which is 11,500. This will go in the higher rate band because the basic rate band is already used. So 11,500 multiplied by 32.5. So it is 3738. This will give me a tax liability 6506, 937, 3733 and 3738. So my tax liability is 14,914. We will deduct tax credit from it to arrive at the value of tax payable. Now, what were the credits in it? What were the credits? In discretionary trust and in IIP. So 9375 minus 7500. So this was 1875 and above one was 5727. I will repeat it again. So have some patience and trust. 14,914 minus 5727 minus 1875. So the payable will be 7312. Listen to me very carefully. What we did was, First of all, we classified the incomes in three heads: non-saving, saving, and dividend. Employment income goes in non-saving head. Discretionary trust was grossed up. IIP. If interest in possession trust earns from non-saving or saving sources, we classify it as a non-saving income and withholding tax is 20%. Discretionary trust always goes in non-saving head and withholding tax is 45. So if the withholding is 45, we will gross it up through 55%. In IIP, the withholding is 20%, so we grossed it up by 80%. Because what we received was the net amount. Bank interest goes in saving income and dividend goes in head of dividend. We added up all of them to arrive at total income. Then the personal allowance was deducted to arrive at the taxable income. Now, in order to determine the 0% band of saving income, in order to determine the 0% band of saving income, what we will do is we will add up all the taxable incomes and then we will look that whether it lies in basic rate band, higher rate band or additional rate band. So when we added up all the taxable incomes, the number was 60532. So obviously 60532 lies in the higher rate band because from 37,700 to 150,000, we have the higher rate band. Now this determination will help us in determining that which 0% band will apply on the saving income. Now we started applying the tax. Non-saving was 32532. It lies in the basic rate band because basic rate band is still 37,700. Then 14,500. First 500 goes in 0% band because we are a higher rate taxpayer on total. And the remaining saving income. And the remaining saving income. Now we have to look at the basic rate band. 37,700 is our basic rate band. 32532 is the non-saving. 500 of the saving income goes in 0%. And then the remaining portion of the saving income is taxed in basic rate band. The basic rate band of saving income is taxed at 20%. Now, once the basic rate band is completed, we are in the higher rate band where the rate is 40%. So 500, 4668, and the remaining portion goes in higher rate band. Then we started looking at dividend income. In dividend income, the rule is very simple. First 2,000 is always taxed at 0% band. First 2,000 is always taxed at 0% band. And the remaining dividend goes at 32.5 because the basic rate band is already used. Now we arrived at the tax liability. We looked at the tax credits to arrive at tax paid. I hope that you are understanding the concept. Okay. So, when we talk about interest income, it is classified as a saving income. Saving income is a separate head of tax. The tax rates of saving income are same as non-saving. But the only difference is that saving income gets some 0% band. I hope that you people are understanding it. Let's look at one more practice question before introducing further concept so that you people can get a clarity on it. Mr. N has following incomes during the year. Pension income 16,500. It is a non-saving income. Income from DT 9,000. Trading income 25,000. Income from bank interest 16,500. Dividend income 10,000. We have to calculate the tax paid. Now, we will simply divide all the incomes in three heads. Non-saving, saving, and the third head will be dividend. Now, pension income. Pension income of 16,500 goes in non-saving. First of all, we classify the income in the right heads. Then we have discretionary trust, 9,000. On discretionary trust, the withholding tax is 45%. So we gross it up through 55%. 9,000 divided by 55% multiplied by 100%. So this gives me 16,364. Then we have trading income, straight away non-saving income, 25,500. Okay. Then we have bank interest, which will go in head of saving income. And then we have dividend income, 10,000. First of all, what we have to do is, we have to classify all the incomes in the right heads. Pension income is non-saving. Discretionary trust is non-saving. We grossed it up and we put it in the non-saving head. Then we have trading income that goes in non-saving. Bank interest goes in saving and dividend goes in head of dividend. Now, we will add up all of the incomes to arrive at the value of total income. 16,500, 16,364, 25,500. 58,364, 16,500 and 10,000. Now we will deduct personal allowance. The personal allowance is 12,570. This gives us the value of taxable income. This gives us the value of taxable income. 12,570. So this is 45,794, 16,500 and 10,000. Now we will apply tax on it. In order to determine the 0% band of saving income, we will add all of the saving incomes, all of the taxable income, 72,294. This shows that we are higher rate taxpayer on total. This shows that we are higher rate taxpayer in total. I will repeat it again. I want you all to concentrate on it. First of all, we determine all the incomes, that which income belongs to which head. Non-saving, non-saving, non-saving. On DD, there was 45% withhold. So we grossed it up through 55%. Bank interest goes in saving head, dividend goes in dividend head. We added all the incomes to arrive at total income. Personal allowance was deducted to arrive at taxable income. We added up all the taxable incomes. We added all the taxable incomes to determine that whether we are basic rate taxpayer or higher rate taxpayer. This concept is used for the 0% band of saving income. Now, the tax will be applied in the normal manner. Non-saving income is 45794. First 37,700. Will go in basic rate band 20%, 7540. Now, once the basic rate band is over, 45794 minus 37,700, 8094 goes in higher rate band. So it is 40%, 3238. Then we will pick up the saving income. Now, the first 500 of saving income will go in the 0% band. Now, how do we know that 0% band will be of 500? We look at this determination. We add up all the taxable incomes. We add up all the taxable incomes to determine that whether we are basic rate taxpayer or higher rate taxpayer on total, so that we can determine the 0% band of saving income. Now, the remaining saving income of 16,000 is in higher rate band because basic rate band is already used up. So 40%, 6,400. Now we have dividend income of 10,000. For dividend income, the rule is very simple. The first 2,000 always go at 0% band, and the remaining dividend will go in the higher rate band since we are higher rate taxpayer. So this is 2,600. Now our tax liability will be 7540 3238 6400 2600 19778. We will deduct tax credit to arrive at the value of tax payable. Now the tax credit was only on the discretionary trust, which was 7364. So our tax payable will be 12414. So if you look at it carefully, the approach is same, just the numbers are changing. You need to learn the approach, you need to learn the concept that how we are solving the question. Rest all is same every time. First of all, what we are doing is we are classifying the incomes in the respective heads. Pension income is non-saving, DT is non-saving, 45% withholding. Trading income is non-saving. Bank interest goes in head of saving, dividend goes in head of dividend. We arrive at the value of total income. We deduct personal allowance to get the taxable income. We add all the taxable incomes to determine that whether we are basic rate taxpayer, higher rate taxpayer, or additional rate taxpayer on total. Now, once we have determined that we are a higher rate taxpayer on total, this concept will be used to determine the 0% band of the saving income. Now, the tax will be applied in the normal manner. Non-saving income is 45794. On starting 37,700, it's 20%. Then on the remaining, the rate is 40. Saving income first 500 goes in 0% band. Now, since the basic rate band is used up, so 16,000 goes in higher rate band, the remaining amount. For dividend, 2,000 is always at 0% band. Since the basic rate band is used, so the remaining goes in higher rate band. We add all of them to arrive at tax liability. The advanced tax is deducted as a credit to arrive at the tax payable. So if you look at the saving income rules, interest income is classified as saving income in income tax return. The tax rates of saving are same as non-saving. The only difference is 0% band, which is of 1,000 pounds for basic rate taxpayer, 500 pounds for higher rate taxpayer, and 0 pound for additional rate taxpayer. We haven't discussed these three rules. We will discuss them. Let's work out one more practice question before adding up the further rules. Now, what you people can do is that you can pause the recording and you can try these questions on your own first. And then you can look at the recording to determine that whether you have done right or not. Let's look at it. Practice question number 14. Mr. N has following incomes during the year. Property income is 27,000. Income from IIP is 18,000. The source is interest income. We know that if IIP earns from non-saving or saving sources, if IIP earns from non-saving or saving sources, we classify it as a non-saving income. And withholding is 20%. Bank interest is 29,000, dividend is 7,000. Again, first of all, we will classify the incomes in right heads. Non-saving, saving, and dividend. Property income goes in head of non-saving, 27,000. IIP, since it is earning from saving source, we will classify it in non-saving. If IIP earns from non-saving or saving, we classify it as a saving income. So we classify it as a non-saving income and withholding tax is 20%. I will repeat it again. If IIP earns from non-saving or saving sources, we classify it as a non-saving income and withholding is 20%. Now, this is the rule we studied 2 classes back. So if someone is getting confused, he should revise that first. Now, you must get confused that, sir, it is earning from interest, but you are classifying it as non-saving. If IIP earns from non-saving or saving, in both cases, it goes in non-saving line. And withhold is 20%. Bank interest is 29,000. Goes in non-saving, sorry. Bank interest is 29,000. Goes in saving. And then we have dividend income. So dividend goes in head of dividend. I will repeat it again. First step is to classify the incomes correct. Property income 27,000 goes in non-saving. Income from IIP. If IIP earns from non-saving or saving sources, it goes in non-saving and withhold is 20. Bank interest simply goes in saving income, dividend goes in dividend. We will add all of the incomes to arrive at total income. 27,000 plus 22,500, 49,500, 29,000, and dividend is 7,000. Personal allowance 12570. This gives us the value of taxable income. This gives us the value of taxable income. 49,500 minus 12570, 36,930, 29,000 and 7,000. We will add up all of them to determine the 0% band of saving income. 36,930, 29,000 and 7,000. So it's 72,930. So on total we are higher rate taxpayer. How do we know on total we are higher rate taxpayer? 72,930 lies between 37,700 and 150,000. Now we will apply tax on it. First of all, non-saving income 36,930 lies in the basic rate band. Since basic rate band is still 37,700, 20%, 7,386. Then we have saving income 29,000. Since we are a higher rate taxpayer, so first 500 goes in 0% band. Now let's look at the basic rate band. The basic rate band is still 37,700. How much gap is remaining? 36,930 and 500. 270 goes at 20%. So it's 54. How much saving income is remaining? 29,000 minus 500 minus 270. 28,230. Now the basic rate band is done. In higher rate band, the rate is 40%. 11,292. And then we have dividend of 7,000. For dividend, first 2,000 always go at 0%. And the remaining dividend, since the basic rate band is used, so the remaining dividend goes at 32.5. Now I hope that this all should become a clerical work for you people. 1625. If I will add up all of them, this will give me tax liability. 7386, 54, 11292, 1625. 20357. You will deduct the advance tax from it, the tax credit, to arrive at the tax payable value. What was your tax credit? So it was 4,500. So the tax payable will be 15,857. So I want you all people to concentrate on it. See, first of all, what I did was classification of income. Property income, IIP interest income goes in non-saving. If IIP earns from non-saving or saving sources, it will always go in non-saving and withholding is 20. Bank interest, dividend income. Once the incomes are classified, we add all of them to arrive at total income. We deduct personal allowance to arrive at taxable income. You add all of the taxable incomes to determine that whether we are a basic rate taxpayer, higher rate taxpayer, or additional rate taxpayer on the sum. Because this determination will be used to determine the saving income 0% band. If we would be basic rate taxpayer, the 0% band would be of 1,000. If we would be higher rate taxpayer, the 0% band is of 500. If additional rate taxpayer, then 0% band will be 0. Now you will apply the tax. The tax goes in the normal manner. Non-saving income 36930 lies in the basic rate band, because your basic rate band is still 37,700. Then saving income 29,000. First 500 goes in 0% band. You are a higher rate taxpayer. Then 37,700 is your basic rate band. The remaining 270 will go at 20%. 500, 270, and the last one. Once the basic rate band is used, we move towards 40% tax. For dividend income, always 2,000 at 0% band and remaining dividend at 32.5. So I hope that there is nothing difficult in it. Is it clear? So, when we talk about interest income, the interest income is classified as a saving income. The tax rates for saving income are same as non-saving. The only difference is a 0% band. We studied these 3 points and we did 3 practice questions. Okay. So the first point, the second point, and the third point. Now let's move forward. Now the normal 0% band is of £1,000 for basic rate taxpayer, £500 for higher rate taxpayer, and £0 for additional rate taxpayer. Now, in addition to this, there is an additional £5,000 0% band. Now, these are the normal bands which are available. In addition to these, there is an additional 0% band available of £5,000 for saving income, but the condition is that the saving income should lie in first 5,000 of the taxable income. Now this rule is a bit confusing for the students. Other than normal 0% bands, in saving income we will get an additional. Other than normal 0% band, in saving income, we will get an additional £5,000 0% band if the saving income lies in first £5,000 of taxable income. Now, how this can happen? This can happen if your non-saving income is less than 5,000. Because in the taxable income, the first slot is of non-saving then there is saving, and then there is dividend. If your non-saving income is less than 5,000, if your non-saving income is less than 5,000, then saving income can get a space on first 5,000 point. On that space, you can get a 0% back. Now, obviously, this point will get clear when we look at in the practice question. But clearing it theoretically, I will try to do my best. Like if your non-saving income is 0, the saving income will get complete 5,000 of the taxable income starting point. There will be additional 5,000 pounds 0% back. If your non-saving is 2,000, if your non-saving is 2,000, the saving income will get 3,000 space in the first 5,000. If your non-saving is 4,000, the saving income will get 1,000 in the first start 5,000. But if your non-saving is 20,000, the saving income will get no space in the first 5,000. See, in this question, your non-saving was 32532. In this question, your non-saving was 32532. Your non-saving was 32532. Now, since your non-saving was 32532, the savings income got no space in the first 5,000. Here, your non-saving was 45794. Saving income was not able to get space in first 5,000. Here, your non-saving was 36930. Saving income was not able to get space in first 5,000. If your non-saving income is less than 5,000, if your non-saving is less than 5,000, then only saving income will get space in the first 5,000. And in that case, the saving income will have additional 0% back. But that is only till first 5,000 of the taxable income. Like if your non-saving is 2,000, the saving income will get 3,000 pounds in the starting 5,000 pounds of the taxable income, and that will be an additional 0% back. Obviously, when we will look at the practice question, this will get clear. So my advice for now is not to rush. Have some patience. Now, interest income from national savings certificates and individual saving accounts is exempt income. If you are getting interest income from national saving certificates, these are the certificates which are issued by the government. Or you are getting interest income from the individual saving account. This is also a government deposit account. The interest income will be exempted if you are getting it from national saving certificate and individual saving account. No investment limit on national saving certificate, but in individual saving account, you can only invest up till 20,000. If you will invest a greater amount, the interest income on greater amount will get taxable. Interest income on 20,000 deposit is exempted. Interest income on 20,000 deposit is exempted. If you will invest greater amount, the interest on greater amount will be taxable. Interest income from national saving certificate, no investment limit. Individual saving account, 20,000 investment limit. The income will be exempted. In national saving certificate, you can invest unlimited. In national saving certificate, you can invest unlimited. But in individual saving account, the investment limit is 20,000. If you will invest more than 20,000, interest income on additional deposit will get taxable. Last thing, no withholding tax on interest income, except interest income received from unlisted companies on which withholding tax is 20%. There is no advance tax on interest income. There is no advance tax on interest income. But if you are getting interest income from unlisted companies, now you must be thinking that why an unlisted company will give us interest income? Because we will have their debentures or loan notes. In that case, withholding tax is 20%, so you need to gross it up. Listen to me carefully before I move towards the practice question. See, I always say to my students is patience, concentration, and have some trust. This is not your first class with me. Things have always got clear, so this concept will also get clear. But you need to listen to me with concentration and have some patience. Interest income is classified as saving income. The tax rates of saving income are same as non-saving. The only difference is 0% band. If you are a basic rate taxpayer, it's £1,000. If you are a higher rate taxpayer, it's £500. And if you are an additional rate taxpayer, it's £0. Saving income will get an additional 0% band of £5,000 if saving income lies in first 5,000 of taxable income. Now this can only happen if the non-saving income is less than 5,000. Because when non-saving will be less than 5,000, the saving income will get space in the first 5,000 slot. This rule will get clear when we will do practice question, so don't rush. Interest income on national saving certificates and individual saving account is exempt. There is no investment limit on national saving certificates. On individual saving account, you can invest maximum 20,000. If you will invest greater, interest on additional amount will be charged. There is no withholding tax on interest income normally. But if you have debentures, loan notes of unlisted companies, then there will be withholding tax of 20%. Now let's apply these three rules in the practice questions. You all know my approach that first I teach the concept and then we go through the practice questions. So listen to me carefully. Okay, so let's look at question number 15. Mr. N has following incomes during the year. Pension income is 17,000. Income from discretionary trust is 5,000. Interest income from national savings certificate is 6,000. You know that it is an exempt source of income. Bank interest 32,000 and dividend income 19,000. Now, first of all, we will classify all the incomes. The first head is non-saving. The second head is saving. And the third one is dividend. Okay. Now, we will classify the incomes. The pension income goes in head of non-saving, 17,000. Discretionary trust, 5,000. But in discretionary trust, there is 45% withholding tax. So we will gross it up by dividing it with 55 and multiplying it with 100. Okay. So 5,000 divided by 45 divided by 55% multiplied by 100%. Now withholding tax is 45%. So we will use 55% to gross it up. Then there is national saving certificates. I told you people that national saving certificates and individual saving accounts are exempt source of interest income. So we will not show it anywhere in the tax return. Then we have bank interest of 32,000. Then we have bank interest of 32,000. This will go in saving income, 32,000. And then we have dividend income, which is 19,000. Dividend will go in head of dividend. So I will repeat it again. First, what we have done is we have classified the incomes in the right heads. The pension income 17,000 goes in head of non-saving. Discretionary trust goes in non-saving. In discretionary trust, there is 45% withholding. So we grossed it up using 55%. Then national savings certificate is an exempt source of income. Bank interest goes in saving income and dividend goes in head of dividend. Once we have classified the incomes, the next step will be to calculate the total incomes. Now let's look at it. Total income 17,000 plus 9091. So it will be 9091. So this will be 26091. In saving, it will be 32,000. And in dividend, it will be 19,000. I think that the screen is not updating. Just give me a second. Let me change the network connection. Okay. So we have calculated the total incomes. Pension income goes in non-saving. Discretionary trust, there was 45% withholding. So we grossed it up using 55%. Then national savings certificate was exempt source of income. Bank interest goes in saving income, dividend goes in dividend income. We have totaled all the incomes to arrive at the value of total income. Now we will deduct the personal allowance. We will deduct personal allowance, which is 12570. We will deduct personal allowance, which is 12570, to arrive at the value of taxable income. Now, when we deduct personal allowance of 12570, this is 13521. Saving income is 32,000 and dividend income is 19,000. So if I add up all of the taxable incomes, because this is used to determine that what 0% band will be used. So it is 64521, which shows that we are higher rate taxpayer on total. Now this question is also a routine question. Only thing new in this question was that national savings certificates were an exempt source of interest income. Now we will start applying tax on it. Non-saving income 13521. Now since the non-saving income is more than 5,000, saving income will not get space in the first 5,000. So that 5,000 pounds band will not be applicable. Non-saving income is more than 5,000. The non-saving income is more than 5,000. So saving income will not get space in the first 5,000. Okay. We will do the questions in which it will get space in the first 5,000. So then you people will have a more better idea. Now saving income is 32,000. On first 500, it will be 0% band because we are a higher rate taxpayer. So 0% band of 500. Now we will look at the basic rate band. The basic rate band is of 37,700. How much space is remaining in it? Now 37,700 minus 13521 used in non-saving and 500 used in saving. So this is 23679 remaining. Saving income in basic rate band is taxed at 20%. So it's 4736. Now the remaining saving income. 32,000 was our total saving income. 500 was taxed at 0% band and 23679 went in the basic rate band. So 7821 is remaining, on which we will apply 40%. So this will give us 3128. And then we have dividend income. The dividend income is 19,000. On dividend income, the rule is very simple. On first 2,000, it is always 0% band. And the remaining dividend income will be taxed at higher rate band because the basic rate band is already used. So 17,000 into 32.5. So it's 5525. This gives me tax liability 2704, 4736, 3128 and 5525. So 16093. We will deduct tax credit, if any advance tax. What is the tax credit? It was on discretionary trust 4091. So this will give us the tax payable of how much? 12002. So I will repeat it again if you look at it carefully. This was also one of the routine questions which we have done. The only thing new was national savings certificates which were exempted. The approach is very simple. First, we classify the incomes. Pension goes in non-saving. Discretionary trust is also non-saving. There is 45% withholding. Bank interest goes in saving income. National saving certificate is exempt. Dividend goes in head of dividend. We added all of the incomes to arrive at total income, less the personal allowance to arrive at taxable income. We added all the taxable incomes to determine that whether we are basic rate or higher rate taxpayer. This is used for 0% band concept of saving income. 13521 of non-saving goes at basic rate band 20% because it is within 37,700. Now first 500 goes at 0% band. Remaining space in the basic rate band goes at 20%. And the remaining portion of saving income goes at 40%. Then dividend income and tax liability. I hope that you are getting it. Okay. So, you know that my approach is very simple. I teach a concept and then we go through multiple practice questions so that the things get clear. You people can understand the approach, that how we have to deal with the issues. Okay. Let's look at two more practice questions. And in these two practice questions, the remaining issues of saving income will also be covered so that if someone has any concern, that will get cleared. Okay. But you people need to listen to me carefully so that things get clear. Now, Mr. N is following incomes. Trading income 7,000. Income from IIP 2,000. Now on IIP, there is 20% withholding and it is classified as non-saving. Income from individual saving account. Now you all know that individual saving account is always exempt. Just a second. You all know that individual saving account is an exempt income. Mr. N has following incomes. Trading income 7,000. Income from IIP. Income from IIP, non-saving head, 20% withholding. Income from individual saving account, it is exempt. Bank interest 25,000, dividend 19,000. Okay, let's start making the tax return. The first head of income is non-saving, then saving, and then dividend. Now, trading income goes in non-saving 7,000. IIP also goes in non-saving, but there is 20% withholding. So we will gross it up by divided by 80% multiplied by 100%. So the gross amount will be 2,500. Then we have individual saving account. It is an exempt source up till investment of 20,000. Now, since the investment amount is not given, so we will assume that it is within limit of 20,000. Bank interest 25,000 goes in saving account. And then we have dividend income. 19,000 goes in dividend. I want you all to concentrate on it. Trading income goes in non-saving. IIP goes in non-saving with 20% withhold. Individual saving account is exempt. Bank interest goes in saving. Dividend goes in dividend. Okay. We will add up all of the incomes to arrive at the value of total income. 7,000 plus 2,500 is 9,500. This is 25,000 and this is 19,000. Okay. Now we will deduct the personal allowance. 12570. 9,500 goes from non-saving. And how much personal allowance is remaining? 12570 minus 9,500. So 3070 goes out from here. The personal allowance is 12570. 9,500 from non-saving and remaining goes from the saving. So the taxable income. Now listen to me. Taxable income in non-saving is 0. In saving income, the taxable is 21930 and dividend is still 19,000. So if I add up all of them, my sum of taxable income is 40930, which means that I am a higher rate taxpayer. See, it is also one of the routine questions. What we did was, first of all, we classified the incomes. Trading income goes in non-saving. Interest in possession trust is grossed up. 20% withholding, non-saving head. Individual saving account is exempt. Bank interest goes in saving, dividend goes in dividend. We added all the incomes to arrive at total income. Then the personal allowance is 12570. First, it goes from non-saving. The remaining goes from saving. Obviously, we will not waste the personal allowance. We will move forward. The sum of taxable incomes. 40930, it shows that we are higher rate taxpayer on total. Now we will apply tax on it. Let's look at it. We will apply tax on it. Now, non-saving income is 0. So obviously 20% of 0 will be 0. Saving income 21930. Now this is the point where you need to listen to me carefully. Now since non-saving is less than 5,000, it is 0. So saving income will get first 5,000 space. And on 5,000, there will be 0% band. If the non-saving would be 1,000, the saving income would get 4,000 on the first 5,000 space. Whatever space the saving income gets in the first 5,000 will get taxed on 0% band. Whatever space saving income gets in the first 5,000 will get taxed on 0%. Since here the non-saving is 0%, so the saving income is getting the whole 5,000 slot. Now the normal 0% band will apply in the normal manner. Since we are higher rate taxpayers, so 500 will go at 0%. And the remaining saving income, 21930 minus 5,000 minus 500. So it's 16430. Since we are in basic rate band, so it goes at 20%. The basic rate band goes till 37,700. So 20% will be 3286. So now once done with the saving income, we will move towards the dividend income. The dividend amount is 19,000. Now for dividend, the rule is always same that on first 2,000, it is always 0% band. So this gives us 0 and the remaining 17,000. Now we need to look at the basic rate band. Why we need to look at the basic rate band? Because we know that on total, we will exceed the basic rate band. The non-saving went on 0. In saving income, first 5,000 went at 0% band. Since we are higher rate on total, 500 pounds 0% band, remaining saving income goes at 20% band, the basic rate. Because the basic rate band continues till 37,700. Now, how much is remaining in the basic rate band? Now, even the things are charged at 0% band, they use the basic rate band. 5,000 minus 500, 16430 minus 2,000. So 13770 is remaining. In dividend, the basic rate band is at 7.5%. I will repeat it, so don't worry. 1033. And the remaining dividend, 19,000 minus 2,000 minus 13770. So 3230 is remaining. Now this 3230 will be charged at 32.5%. 3230 on 32.5%. This gives me 1050. So if I add up all of them to arrive at the tax liability, it's 3286, 1033, and 1050. So it's 5369. I will repeat it again, so don't worry about anything. We will deduct the advanced tax as a tax credit to arrive at the value of tax payable. Now, what is the tax credit? This IIP was grossed up from 2,000 to 2,500. So the credit is 500. This will give us a payable of 4869. So in this question, what was different was 5,000 pounds 0% band. Listen to me. Trading income goes in non-saving. IIP 20% withhold goes in non-saving. Individual saving account is exempt. Bank interest goes in saving. The dividend goes in head of dividend. We added up all the incomes to arrive at total income. The personal allowance is 12570. Goes from non-saving and the remaining goes from saving. Okay. Obviously, the personal allowance cannot create a loss. So first it was deducted from non-saving and then remaining went from saving. Taxable income. We added up all the taxable incomes to determine that whether we are basic rate taxpayer, higher rate taxpayer, or additional rate taxpayer on total. So on total, we were higher rate taxpayer. This needs to be determined for 0% band of saving income. Now, non-saving income 0 at 20%. Now, since the non-saving income is less than 5,000, so saving income got space in the first 5,000. Whenever saving income will get space in the first 5,000, the extent to which it will get space on first 5,000, you will get an additional 0% band. Since here the non-saving was simply 0, so the saving income got whole 5,000 space. So 5,000 into 0% gives 0. You are higher rate taxpayer, so saving income gets 500 more. And then the remaining saving income goes at 20% because we are in basic rate band. Now, what about dividend income? First 2,000 always at 0%. Now we looked at the basic rate band. The remaining portion at 7.5% because dividends basic rate is 7.5 and the remaining goes at 32.5. Tax liability, tax credit, and we got the tax payable. So what rules we have covered of saving income till now? Interest income is classified as saving income. The tax rates of saving are same as non-saving. In saving income, these are normal 0% bands. If saving income gets space in first 5,000, there is additional 0% band. Exempt interest income. And normally there is no withholding tax. But if saving income is from unlisted companies, then there will be 20% withhold. Let's look at one last practice question, which is question number 17. Okay, and then we'll sum up our today's class and then we'll move towards, in the next class, we'll move towards the new issue. Okay, let's look at it. Now, in practice question 17, he's saying that, now, Mr. N is following incomes during the year. Employment income is 4,000. Income from real estate investment trust. I hope you all remember that there used to be 20% withholding on it. Interest income is 40,000 and dividend income is 12,000. Again, first of all, we will classify the incomes in 3 heads. Non-saving, saving, and the third one will be dividend. Now, employment income is 4,000. Goes in head of non-saving. Then real estate investment trust. There is 20% withholding on it. Divided by 80 into 100. So 3,000 divided by 80 into 100. This gives us 3,750. Now interest income is 40,000. Simply goes in head of saving. And dividend income is 12,000. The first step is to classify the incomes correctly. Okay. Now when we add up all of the incomes, we get the value of total income. 7,750, 40,000 and 12,000. Now we will deduct personal allowance from it, which is 12570. But obviously the non-saving income is insufficient. So we deduct 7750 from non-saving and the remaining personal allowance 4820 from saving. 12570 is the personal allowance, 7750 goes from the non-saving, and the remaining 4820 goes from the saving income. Now the taxable income will be 0. 40,000 minus 4820. So it's 35180 and this is 12,000. If I add my all of the taxable incomes, 47180, which means that I am higher rate tax payer. Okay. Now, let's start applying tax on it. Non-saving income is 0. 20% on 0 will give us 0. Saving income is 35180. Now, since non-saving is 0, so saving income will get space in first 5,000. Since we are higher rate taxpayer, so 500 more goes in 0% band. And the remaining saving income, 5,500 is deducted. So 29680 goes on at 20%. 5936. So now by this time, I hope that this should become routine for you people. Now we have dividend income, 12,000. On dividend, first 2,000 is always at 0%. Now we should be looking at the basic rate band because I think the band should be near end. 37,700 minus 5,000 minus 500 minus 29680 minus 2,000. So only 520 is remaining in the band. Whenever you feel that band is near to end, you have to check it. Because after the basic rate band, the tax rate will get changed. So 12,000 minus 2,000 and minus this 520. So 9480 goes at 32.5%. Since we are in higher rate band now. So 3081. If I add all of them, this gives me tax liability. 5936, 39 and 3081. So it's 9056. We will deduct tax credit, the advanced tax to arrive at the value of tax payable. Now, what was the advanced tax which was on read? 750. So the payable will be 8306. So if you look at this question, again, it was a routine one. First of all, we classified all the incomes. Employment is non-saving, REIT is non-saving, there is 20% withhold. Saving income, dividend income. We arrived at the value of total income. Personal allowance is 12570, first from non-saving and remaining from saving. Taxable incomes On total, we are higher rate taxpayer, which will determine our 0% band of saving. Non-saving was 0. Now, since non-saving was 0, so saving got first 5,000 band also. Normal higher rate taxpayer, so 500 band. The remaining saving income in dividend first 2,000, then the remaining space in the basic rate band and the remaining dividend income. So if you look at the interest income concept, we did almost 6 practice questions, and my effort was to make the concept more and more clear. Interest income goes in saving income. Its tax rates, 0% band, additional 5,000 band if the saving income gets space in the first 5,000. National saving certificate and individual saving account. No withholding tax on interest income except the interest income is from unlisted company. And we did 6 practice questions. Okay. I hope that it has got clear. But still, in the next class, when we'll add up new rules, we will still be going through the interest income concept. Because you know my approach, I add up the new things and we continue practicing the things in the new practice questions. Okay? Thank you, everyone. If you have any queries still left, you people can ask me on my WhatsApp number. Okay? Thank you.